Hello, it is the 6th of September 2012. It is a Thursday, and welcome to today's silver chart analysis. As the 32 and 2/3 level that I've been talking about was reached today. Breaking past this resistance, there were two up days, which was last Friday and Monday. Tuesday and Wednesday were sideways pause days, which has seen the price action go higher. Still below this 18 average, the upper band, which is related from the 18 average. And the upper band right now is set at 33.49, which is a somewhat significant level. And we'll look at that just a little bit, but before we do that, I want to look at the 32.66 a little bit better. We're going to look at this on the 32-hour time frame, and there we have it. This was the top in the February of this year with a 26 bottom, and it's found resistance within this area. What we do from here, tough decision, can't really tell. It's one of those then what situations. Let this thing play out a little bit, see what kind of the messages that could be given, and adjust to the message of the market. Alrighty then, so I guess support right down in here. If it does happen to pull back, at least that would be the next significant level of support. But the 33 area, like I say, little importance when we look at this on the weekly time frame as the Fibonacci level 33.42, which represents the high of about $50 set in April of 2011, and the multiple hit of pennies above 26 per ounce as that significant level. Again, coming up to this level, what are you going to do now? It's already a pierce below it. And then you can take a look, say again, okay, same thing. We're going to find a higher support level there. Maybe it meets up with the 18 average band at some point. Very difficult to state. Well, let's look at the highs and the lows. You got this high, you got this low. Therefore, this was obviously a higher high, making highs not seen in multiple decades. And then you make a higher low, make a lower high, lower low, lower high, matching low, higher high. There we go. There's some progress, but another matching low. So, okay, so we're in the sideways range or whatever. But you can also now say, well, as long as it makes a higher low and a higher high, that's fine. It doesn't need to, at this leg, run up to get past this 37.5 level. But if it does happen to have a pullback, maybe meet up within this band and then make that higher high, that would be productive. I'm going to show you a quick little example of such. We're going to use a short-term analysis, something that broke out today. So you have this high and you have this low. Now it didn't get above this high, but it did make this higher low to this one. And as this thing is breaking out of this Fibonacci retracement, it did manage to not only break past this high, it also managed to break past this one here, as obviously the price went up to $32.99. So that's pretty much how this thing is going to be playing out. When you get to these levels of resistance, of course, that's 32.66 on the chart for year to date, basically, and the chart for the last few years, of course, is at 33.42. How it plays out from then is very difficult to point out. There should be some sort of pullback, but that doesn't necessarily mean that there will be. If there isn't a pullback, I'd be looking for support at the two key areas with a possible move to the next level. If this area is, of course, not resistance, the next level to the upside is 38.92, and on the 32-hour time frame, if this level is not resistance, the next one is the previous high, that is at 37.5. And thank you for tuning into today's video, and have yourself a great day.